Hey, everybody, I'm Irene Meyer. Welcome to our podcast, Keeping It Real, where we talk about real finance with real people and about real solutions.
I'm Philip Villanueva, and I'm here today with Irene. And today we're going to discuss the industry, what industry that we're actually in, what we do, and how it works for people, right? Now, our title is insurance agent, but there's a lot of controversy behind that title, isn't there, Irene?
Yeah. Oh, yeah. There's just in the word insurance agent.
And what kind of controversy comes off the top of your head?
Let's think about it. When they hear the word insurance, they hear sales. That's really what people think about. They think of sales, unnecessary expense in some cases. And so when you hear sales and unnecessary expense, automatically you want to turn away, you want to reject the idea.
Yeah, no, that's really true. A lot of people don't see it as a means to their financial stability and well-being. They see it
Right.
like something that they just got to put money into, that they're not going to get anything out of. There's no kickback, there's no benefit. It's just something that's for just in case something happens unforeseeable or whatever, right? But they don't see that as a means to protect themselves or protect what they're doing in their assets or anything of that nature. It's really interesting. Now, in some areas, actually in Canada, there seems to be a lot of insurance people that call themselves financial advisors. And there's a lot of controversy behind that. So society not only doesn't see it as a means of financial planning, but the title itself has controversy when it comes to that.
Yeah. Yeah. I think even coming from knowing what the industry entails, even though, so this might not be something, Phil, but the word advisor, you can spell it with an OR and an ER at the end. And it's an advisor with the ER that you can't necessarily call yourself unless you have a special course behind you, a special accreditation. But you're right. Even just the word advisor doesn't really matter. People don't think of licensed insurance agents as the expert to help them with their financial needs. Do you get the same thing?
So in the title of financial advisors, because that's an actual accreditation in our industry, someone who's considered a financial advisors, but their titles are CFP, certified financial planners, or certain accreditations are only allowed to call themselves that, and insurance agents are not. Legally, they cannot address themselves as financial advisors. But yet, when we're talking to the general public, we are talking about financial advice. We are giving financial advice. So why is that? Why is there that confusion, or why is there that, I don't know how to term that, this hold back on what we do?
If you had to ask my advice, I don't know if this is true, but if you had to ask my advice, I think it's because not all licensed insurance agents treat the industry the same way. So, for instance, if you're a licensed insurance agent, then you're able to work for insurance companies or banks that have insurance departments and sell insurance.
Okay.
But that's all they do. They don't talk about how it fits into somebody's budget. They don't talk about how to address their retirement and future needs financially. Whereas there are some advisors that are licensed insurance agents that take that part of their, I guess, their learnings, because we all learn as licensed insurance agents about investments,
Mm-hmm.
right? In our training field, when we did the licensing program, we learned about investments, but depending on the company, I think you are hired for selling insurance or you're hired for selling segregated funds, for instance, in the insurance world. And I think at the end of the day, it's dependent on the agent themselves, as well as if they're employed with the company that just hired them to sell insurance.
Yeah, and I'm wondering, because that can, when you're putting the onus on the individual, that could actually work even in someone who's a certified financial planner, because they may not do their business properly either. So I'm not sure if it falls on the agent as opposed to the agency, right? Because if you think about it, you're right in saying when we're doing our exams and we're getting our license, we all have to do the same license. It doesn't
Yeah.
matter what agency you're a part of, you're writing the same. So you're doing your there's 4 exams that we have to get for our license, the harmonized life license qualification program. That's our license, HLQP. And in
Yeah.
that license, we have to write 4 specific exams. So we have to write our life insurance license, we have to write our accident and sickness, we have to write our segregated funds, and the biggest one, the ethics exam. So
Right.
those are the 4 exams that we have to write. And all of us, it doesn't matter what agency you're joining, we all have to pass those 4 exams. So we're
Right.
all learning the same things. However, depending on the agency that you are a part of, you may not actually be able to work like the segregated funds, or you may only be able to work a portion of the life insurance part,
Right.
right? So you're not getting the full financial abilities to be able to do financial planning. And I think that's where the differences lies, because there are different kinds of insurance agencies, correct? You have you might be what they call a captive agent, right? Or a broker, right?
Hmm.
Now, what's the difference between those two? Okay, so in regards to being a captive agent, they're an agency, and I know we can't talk specifics in regards to names of agencies or anything of that nature, but there are agencies out there that can only sell their product. So you are working specifically for one company, right? That is a
Right.
captive agent. But then you have your brokers who are not biased towards it. They can literally direct their clients to whatever company is going to suit their specific need. Where a captive
Right.
agent can only deal with whatever their company provides. So
Yeah, that makes
that makes a
sense.
big difference when you're dealing with financial planning, because somebody may need something that your company cannot offer, and that would directly affect a proper financial plan. I can understand where there are the limitations for insurance agents being called financial advisors, because some of them realistically can't give sound financial advice.
So then, if we're talking to people like us who are looking for financial advice, how can we help them use the right terminology to get what they want? Do you know what I mean? People are just looking for a financial advisor because they're deeply in debt.
Yeah. I think it's really important that the general public becomes aware of being able to ask the right questions, because they may come across an advisor, okay, they're a professional, they should know what they're doing, but there's a lot of doctors out there. There's family practitioners, there's general practitioners, there's surgeons. If you need to get surgery done, you're not going to have a family doctor do that. A general practitioner,
Right.
you're not going to have that done,
Okay.
even though they're both doctors. And the onus does fall on the profession in a sense, but they, as a consumer, I shouldn't be scared to ask, do you have any limitations? So part of that is preparing the general public, and it's going to be blogs like this and podcasts like this that let people know, don't be scared to ask these questions. And then what kind of questions do they ask? Does
Yeah,
your license allow full planning? Can you actually give full financial planning, or are you just providing a product for an individual company?
true. Yeah, that's true. I think a lot of the time people like consumers, like they actually don't even know half the things they need. I don't know if you'd agree with me there. So that's where the lack of knowledge of what question to ask in the first place,
Yeah.
right? They're already thinking that everybody has their box, right? So when they need insurance, they go to an insurance agent. When they need solutions to their problems with debt, they either go to a debt recovery place or the bank, right?
Right.
Or when they want an investment, they'll ask for a financial advisor,
Yeah.
right? Because that's what immediately I think they go to. So, what would be like the proper questions? Okay, so they ask a question. Let's say they have a problem with, they just don't know how to invest and they know they should be investing. Can a life insurance agent help?
This is the thing, is that depending on the agency that life insurance agent is with. And that's what
Right.
you figure. Now, it is again a big part of our examination, our license is ethics. Technically, we are legally bound to talk about our limitations and what we can do with the client. We're supposed to let them know that, but not all of us do. And that's a big problem in the industry. That's why part of the regulatory body, every province has its own regulatory body that governs them. And part of what they're enforcing in the ethics part is transparency.
Right.
We
Yeah.
letting people know what we can do. So I'll give you an example. Like, it's not just in our industry, it's not just us, just for the sake of this podcast. That's across the board in a lot of financial industries. And I'll give you an example. I came across a client. She was 24 years old. young. She was young, and she was in a consumer. She was applying, or she was in the process of getting a consumer proposal. She was referred to me by a client of mine. Okay. And I met with this client. I met with her and talked about the situation. And she told me that she had just applied for a consumer proposal. And I was like, wow, that's really early. That's really early. And that, why don't we do this? Let's do a financial breakdown of your current financial situation. And so I started running through the numbers and everything. Halfway through, I'm thinking, this doesn't make sense. Something is not clicking here because we're only halfway through this, but she's okay. There's no reason for her to be getting into a consumer proposal. So I wasn't seeing it just halfway through our my gathering of information. And as an insurance agent, it is mandatory that we get to know our client. That's part of our process, is getting to know your client. A step that some miss or some skip, or they skim through. They just, what do you make? What are your current liabilities? And this is how much you're worth. And that's all they gather instead of getting the full details. But we as a team are working on changing how we do things and what we do. And we're trying to get the full details and really getting to know our clients. So I was doing that with this particular person. And as I'm going through, near the end of it, I'm like, I really didn't see it. I did not see any need for this. So I was confused. I was like, okay, what is this? So we have a lot of, because of our agency that we're a part of, we can actually do all of it. We're a full holistic financial representative, and we can help in the full realm. So I actually reached out to one of my affiliates who works in bankruptcies and consumer proposals and things of that nature. I just got him on the phone. I said, this is what I'm working with. I'm working with this client, and I've done a full assessment, and I'm not seeing why she would be getting in the process of getting his proposal. And I asked for his opinion. I just gave him a really quick brief without exposing the client or anything, just a really quick brief of what I had seen. And he said, what company did she go to? That was his first question. And I asked her, I told him, and he said, well, that's the reason. It's because they only work with consumer proposals and bankruptcies. That's all they do. So when she went, what happened is she just Googled, okay, I'm financial debt, and this number came up, and she just called it. And then the person just right away just started putting her towards a consumer proposal because that's all they offer. So he's trying to drum up business. He's trying to sell. And that's what the guy said. He told me that's probably the situation. And I ran over everything, and I talked to her, and I said, you need to think about this. You need to think about whether or not you want to. So she actually canceled her application and went about all her only issue. It had nothing to do with her income. It had nothing to do. She wasn't really that heavily in debt either. It was just
Yeah,
budget. It was pure budgeting. She was just
right.
spending way too much more than she was earning, but she was
Yeah.
actually earning a decent amount.
Mhm.
She just had rich taste.
Yeah. Yeah.
And that's all it was. So instead of jeopardizing her future, which it could, right, we nipped that in the bud. Like, it would still, in all honesty, it will still show that she applied for this proposal if they were to do a credit check. But she could say it was done prematurely. She hadn't talked to an advisor, yada yada yada, and explain her way out of that. But so because it was never completed, the process was never completed. They didn't do any of the allocation of her funds or the consolidations or none of that. None of that was done. It was just the process of the application, right?
Good.
Yeah, so we caught it really early, but at the same time, because she just went to an agency that only dealt specifically in that directly, they didn't even try to deviate. They didn't even try to guide her or say, hey, listen, you don't need to see us. You
Right.
go see an advisor first. And that's where the problem is,
Yeah.
right?
And that's agency specific wherever she went, because I know of a debt recovery collection. I don't even know what you call them, like licensed bankruptcy trustee or whatever you call them,
Right.
that actually how she makes money is helping people like go through bankruptcies and consumer proposals, but she actually runs her clients through a budget first. I know
Oh,
somebody like that actually does that. So she wants to know that it's worth it to the client, explain what the ramifications are to go through something like that. So she'll go through she'll go through a bunch of things before she even suggests, yeah, this is the only option we have. So it's even individually specific, right? And so that was a really good point, because you go to a bank, for instance, and you say, I'm heavily in debt. The only thing a bank can do is really see if they can come up with a way to consolidate your debts to make it easier, the payments to be easier, or if you have a mortgage, if there was a way to refinance your home to pay off all the debts with the equity in your home. But that's all they can do. They're not going to really analyze where the underlying problem came from. And I think, again, coming back to us being insurance agents, guys, right? We take the extra steps to make sure that budgets can withstand expenses, much needed expenses like saving for your future, like putting money into insurance and protection for you and your family before we even go into, I suppose, the solutions that somebody would need. Whether or not you came to me, I'll tell you this, whether or not you came to me with the problem of debt, I can easily and I think you're the same way, Phil, like we look at the information and we know exactly how we can help them, even though there's no product attached to it. Would you
Yeah,
agree?
absolutely. 100%. And that's where I think it's really important, any customer out there, when they're talking to their advisor, if the advisor's actually listening to what you're saying and dealing with your problem, as opposed to just talking about what they can offer, right? That's going to make a big difference. And that's where the consumer needs to realize that, right?
Yeah. Yeah.
Because if they're just trying to do, okay, let's just do a quick figure out, okay, how much are you making, how much, do you have any debts, what are your debts, and they say, okay, this is what we can do right away, without really spending time finding out about you, your history, your background, how you spend your money, down to, do you go shopping for clothes every single week, right?
Right.
Like something like that, because that will affect what you do, right?
Yeah.
If you're a big
100%.
spender, yeah, if you're a big shopper, that's going to affect what you should actually do in regards to setting yourself up, we need to look at your shopping habits. Something
Yeah.
needs to be looked at in more detail.
Yeah, yeah, 100%. I'm going to try something on you, Phil. So when we're looking at, let's say that you come across a client, let's say a client profile, they're 35, they make 100 grand a year. They have maybe $40,000 in savings through their company, through a group RSP. They
Mhm.
rent and they live out in, let's just say, Sarnia. I don't know. Doesn't
Yeah.
really matter. You're from Sarnia, I'm from Edmonton. But let's just say that's the profile. Okay. What did I say? 35, 100 grand, 40,000 in group RSPs, and they rent. What would you want to know first? Just from those numbers. I really want to know what you would think, and then what I think what would happen in the bank.
Okay, so they're 100,000. Let me get those numbers
Yep.
again. And they've got 40,000 in their company RSPs.
Yep.
And what was the other thing?
They rent, and there's
Oh, and
35.
they're renters. Okay, so you're talking a specific individual. First, is this a family person? Do they have a
No,
family?
they're single.
Okay, so it's a single person, and we're just dealing with one person.
Yep.
Okay, 100,000, 40. I'd have to know what their rent is, how much they're paying.
Okay, so what would rent be like in a place like, I
Okay,
don't know
so
much about
let's
Ontario,
say a
but
one
let's,
bedroom place. They're, what is
sure.
it, $1,500?
Okay, 1,500, sure.
Okay, so they're spending $1,500 on their rent. I would want to know what other things that they have, like the car payments.
Okay, let's say they have a car payment of $500 a month.
So what I would do is, okay, I always do this with all my clients. So the first thing I always do is, well, why are you seeing me?
Yeah,
Why are you here?
yeah.
Right? So
But
this,
before they even ask that, what would you assume?
I wouldn't assume.
Pretend you were just given a lead.
Okay,
These were the numbers. Of course, you're going to ask, why are you here? But what
yeah.
could you assume what could you assume they're there for? What could you
I
assume?
honestly, I've come across so many clients now that I can't assume anything.
Okay, give me some problems. If you were to like dig back
Because
into your
you would
toolbox,
most people would think that he's making good coin, decent income,
yeah,
right? And he's probably doing well. He's probably pretty stable and doing well. That would be the first assumption, and I can make some money off this guy. But I've I've seen a lot of people making $100,000 a year who are car and house broke.
Yeah.
I don't know this person's situation. These numbers don't tell me enough. That's the first thing that comes to my mind. This doesn't tell me enough. So I would have to
Right.
find out what makes this person tick.
Okay, so if you just needed extra information, they said they need investment advice because
Okay.
they actually know they should be saving
Yeah. Okay. So if
and
they're
they're
looking
not.
at their investments, if that's what they're looking at, again, we do have to do at least the primary get to know and find out their income, expenses, and all that kind of stuff. But a lot of I would first find out that company RSP, is it being matched,
Yeah,
right? That
usually is.
Yeah, okay, so it's being matched. So I'm not even going to touch that because they're getting free
Yeah,
money.
and the reason I even brought that up is to give you the idea that they didn't start it themselves.
Okay,
That
okay.
is the whole point of that. I guess maybe what I was trying to talk about is if you had nothing else and you had to try to sell yourself to this person.
Mm.
Okay, because I think that's really what it comes down to is knowing that even if I
Oh,
just knew the basic numbers, how they ask, how can you help me? What if they even came to you? They had no question. They had no idea why they were here to see you, but such and such person referred me to you because they thought you were good.
okay. And so in saying that, I would try to find out what are they looking for in their future? What kind of future do they want to see for themselves? Because without knowing that, I really don't know how I can help these people.
Right.
The numbers won't tell me anything. And that's what I think that's the biggest thing between possibly us and the people who are just selling a product, like selling something. Because we don't have quotas.
Yeah.
Okay, other than we have to still provide income for ourselves. That's our quota, is we still have to,
More self-inflicted quotas.
yeah, self-inflicted quota. So we have that, fair enough. But in the sense of we can actually find out what is going on as opposed to just trying to say, oh, how can I help you? Let's set up an RSP. Let's set up a TFSA. You've already got an RSP at work. Let's have an individual one that you're gonna have full control of yourself. Instead of just talking about that kind of stuff, what is it that you're trying to work towards? Because they
Right.
might be thinking about investing because they just might want in 5 years from now, they just might want to go on a major trip.
Right.
Maybe that's where their mindset is on setting up investments. That's great. That's a great short-term thing to set up. But what about the long
Right.
term? Because that RSP that you've got going on through work, it's great that it's getting matched and the company's putting that, you're getting some free money out of that. But one, you're probably not getting the best rate of return, but that's okay because they're adding some extra funds in there. So you're setting up your own personal one because that's let's do the numbers on this. Will this be enough for you in your future? So all of that, it's financial planning is not just a sit down 30 minutes, just look at some numbers and you're set for life now. That's not the way it works. Because let's face it,
Right.
my life and your life 3 years from now is going to be totally different and
Yeah.
hopefully in the better,
Yeah. Yeah.
right?
Yeah.
So,
And I think that's the goal with an advisor is to always um, give this person the best opportunity to improve their financial situation. And I think that's where a lot of, and now coming back to the original question, like why, how different people are, how different agents are different in the sense of just their title versus what they actually can, are capable or willing to do for their clients. And in a situation like this, it was more to determine like, yeah, you can't really look at somebody based on their numbers. However, there are things you can assume, right? So if this is all I had, I would have a good opportunity to provide protection advice, right? Insurance advice. I would have a great opportunity to educate them. You touched on it, educate them about their group RSPs. Now, I might not be able to handle it, but I can at least look at the investments they have invested in and give them advice as to, you know what, this fund is actually in a very conservative fund. And if you plan on keeping your employment here and you keep this RSPs here, you probably can go a little bit more, I wouldn't say risky, but we would go a little bit more long-term focus. So I can still give advice there and they're going to appreciate that. And then show them what that growth is going to look like 3, 5, 10 years down the road for that particular RSP, and then go into this is where you need to be if you want to retire. To your point, where do you want to go? Like where this is where you need to be if you want to retire at 65. So on the great, you have a great opportunity here with your company because you get basically free money, but you still have a little bit of a gap if you want to hit this goal. And talking to somebody for the first time when they said, what do you do? And I think in a way, just by looking at those numbers, I can easily say to them, I help high income earners get out of the paycheck to paycheck cycle. And I think that in itself will get them intrigued, because if that's all they had, and I'm assuming that a lot of people are in that spot because I've seen a lot of people in that spot, maybe with even more debt, they're going to be like, how do you do that? Because they know, and I'm touching on a problem that's very general, but I know it's so general that it's universal across many people who are high income earners. And 6 grand, I 6 grand, 6 figure income isn't necessarily considered high income anymore. It's in a lot of places the standard, but it's still a lot of money that no one should be in paycheck to paycheck, let alone if you have a couple making 6 figures each. There should be no reason that a couple should be paycheck to paycheck given that kind of income. Would you agree?
No, 100%. Like even less than that. Realistically, people should not be in a financial pinch if they're dealing with their finances properly. Right. Here's the thing. Here's the kicker on you said something here to me that I found interesting. Knowing the numbers that you just gave me, you could give advice on insurance. Okay. Where I didn't feel like I could. And I'll tell you why. Because you got a single person here, right? I'm gonna play the devil's advocate a little bit here.
Sure.
Okay. Do they even need insurance? They're a single person. They've got no dependents on them. Do they even need insurance? Why do they need insurance? And there are a lot of single people out there who think exactly that. I'm by myself. I don't have any kids. I'm not planning to have kids at all. I don't want a family, right? So what do I need insurance for? That's what they think. And
Yeah.
that's a very valid point, right? So how can you determine if without knowing who your client is that they need insurance? Because a lot of agents say, okay, you're making $100,000 a year, typically you're going to want to cover this percentage of your income base and protect it properly with insurance. And I just want to point out we're insurance agents, but we're just touching on insurance now. How long have we been talking? And
Yeah.
that's what people don't realize. And here's the thing, that okay, they may
Yeah.
not need insurance. However, if they have any kind of debt, Mr. Client, let's look at that, because even if you're not around anymore, somebody is going to be responsible for that debt.
Yeah.
Somebody is going to be, whether it's your parents, whether it's your siblings, somebody is going to be attacked on that debt. So let's
Mhm.
protect that. Okay.
Yeah.
Let's protect at least that amount and go from there. Now, if Mr. Client, you are thinking you might want to get married down the road, right? Do you really want to limit to just covering your debt, or do you want to have something that's in place for that responsibility you're going to have down the road? Because if you want to wait until then, it's just going to cost you more at that point. What do you want? How do you want to work? So there's so many different variables, and I can keep going on and on different variables, right? So that's why it's really important that what is the direction this person is trying to head towards. So that's why I was saying the numbers. Yeah, you have your industry standards, like anything, where we can look at these specific numbers and say, okay, this is where I could go with this in general.
Yeah.
But the reality is when you're actually dealing with a client, that should not be the case.
Yeah.
And
Yeah.
that's what you were alluding to, is how do you want to govern your business? How do you as an individual agent want to cover your business and do your business?
And don't get me wrong, maybe you're the kind of agent that just wants to sell insurance. That's totally fine, 100%. I think consumers need to have a little bit more in terms of tools, the right questions to ask to know what they're looking for. And I think Phil and I are both of the mindset that you can do it all with the right intention. You may have to be self-employed, right? You can't be working for an agency who's governing what you are to sell or what you are to provide to your clients. But I think at the end of the day, when we think about different things that people like consumers, Phil, and like we'll end this off, like what are the things that consumers should be looking out for when they're looking for the proper financial person? We won't use advisor or insurance agent, but if you can qualify some major factors that they should be considering when they're looking for the right person, what were some of those things that kind of come to mind for you?
I think that as a consumer, you really need to look at how open, like if you're asking questions, ask questions. That's the first thing. ask questions. Be ready with, if you're talking about your personal financial being future, be ready to ask questions to your advisor. And if his answers are not actually answering your questions, and it sounds like they're doing kind of a loop or a go around, or they're going around it, be leery, because they're avoiding directly answering your questions for a reason. It could be because they can't do that. They have
Mhm.
their own limitations that they can't do that, or something is it's not quite right. If you're feeling something's not quite right, then go with your gut.
There's a flaw in that too, because you can probably relate. When people go with their gut, sometimes their gut is based on what they read on the internet, right? So as soon as you mention, let's say, an agency you work with, a brokerage that you work with, people already think that you're already like the other person that tried to approach them. So
Yeah.
how does a consumer separate the company name, the product type from the actual advisor they're actually needing and seeking?
That's why I said they should be ready to ask questions to that advisor. Like they need, when I say go with your gut, not go with gossip or anything of that nature, like actually deal with the person that you're dealing with. And because they're going to work with you on your financial future. So there's going to be a relationship here. You're building a relationship with your advisor, just like your advisor is trying to build a relationship with you. If they're not trying to build a relationship with you, then why do you want to work? Why do you want to be together in the future? It's like starting a personal relationship. If it's one-sided, then why do you want to get involved in a relationship with that person? With your advisor, if it's one-sided, if they're not answering your questions, they're just trying to promote product, right? That's not building a relationship with you. And that's really important, because there you are building a relationship with your financial advisor, right? And they are going to
Right,
be close to you, because there's going to be some questions that he should be asking, or she should be asking, that are very personal. In the end,
right,
it's got to get there, and you have to be comfortable enough with this person to answer those questions. And if
right.
if the advisor is not getting to those personal questions, again, that's a red flag.
And how does a consumer know though? Because sometimes the consumer doesn't quite know, and I'm not trying to downplay anybody's education here, but sometimes the questions that are asked are not necessarily the questions that should be asked. Do you know what I mean? You can have somebody who's very, very good with their words, an advisor that's really good with their words, and they may seem really suave and they don't seem like they're avoiding any kind of question, but they're really good at asking questions. And then you have a consumer who's not so good at knowing even what they need or want, and they're trying to find just help. I almost think that, yeah, the consumer should definitely ask questions, but what if they don't have the ability to ask questions? I think at the end of the day, maybe what we're talking about is somebody who's looking for an advisor and to really know their problem in the first place. If your problem is you feel like you have no more money by the end of by the time next paycheck comes, then ask, how are you going to help me with my paycheck to paycheck problem? Because that's really what the problem is, right? Or how some people are like, how can you help me?
Yeah.
And like I said, in that example where you have really no information, right? You asking the question, tell me this, do you think you need help? Really, that's the question a proper advisor would ask. Tell me how you feel like you might need help in the first place. And then just getting them to talk. I think, in a way, one of the biggest things you could do is if you're talking in front of the right person, you should probably be doing the most opening up with the information. They've gotten you to the point where you can trust them enough.
Yeah.
So that's a really good way of determining if you're in front of the right advisor, is they've earned your trust that you can divulge information that you don't necessarily feel comfortable with talking about.
Yeah. In saying that, there are a lot of advisors that are salespeople, right? And
Yeah.
they are, like you said, they are very good at talking. They know how to win you over. And because one of the key aspects in selling is building trust.
Mhm.
Okay, so how do you eliminate the fact that someone's just building trust to the point of that person actually having the ability to help you? Right? There's
Yeah.
that factor too. That it's difficult. Like it is difficult, especially because there are agencies out there, or agents out there that may not just be educated enough to be able to help, or they may not have the experience to be able to help properly. And like you said, some are just not doing that. Like in the sense of institutions, you touched on this. They can't help you with a financial plan per se. They can help consolidate loans. They can help get you another loan to help. I found that really interesting. Is I'm trying to get out of debt. oh, no problem. We'll set you up with another debt to help alleviate that debt and just keep you in that cycle. So
That's the
I don't,
reality though.
yeah, and that's the reality and it's interesting because that's the reality we know and we trust. It's we complain about the government taxing us all like crazy, but that's their solution to help alleviate the deficit of the country is to pay more taxes.
Put it on others.
Yeah, put it on others. And that's the same thing with with the institutions that say, okay, we'll just get another loan. We'll just make it look different. We'll just put
Right.
on different clothes on it and pretty it up a little bit and put it all
Yeah.
in one. It's really interesting how that works, but we've been customized and to appreciate that as opposed to somebody who's actually trying to figure out how to fix the solution.
How to fix a problem that happened in the first place. Like
Exactly.
really, it's like debt and paycheck to paycheck and not having enough money for retirement is a symptom of a deeper problem.
Yeah. Yeah. Can I ask you, in your personal opinion, and this is a personal opinion, what is there a commonality with people that are paycheck to paycheck?
Yeah, there is a commonality. It's a generation thing. I know
Mhm.
I hate to say it because it's my generation. And I've dealt with thousands of people in my experience, and it's my generation. My generation grew up modest, humble, didn't have a lot of money. And not to mention the fact that I'm obviously a minority where I come from an immigrant family, but I was born and raised here in Canada. But where my parents grew up, there wasn't a lot of money. Okay. So it came from a lot of the paycheck to paycheck people are the ones that had gotten themselves into debt because in the 80s, credit cards became a thing and became easily accessible, really close, like really much later. And it's just something now we rely on as extra income, really, at the end of the day. And so that's really what's causing this epidemic of being paycheck to paycheck is this unknowingness of what actually needs to happen. We're so focused on living for today that we don't even know what's coming. And because I work in an industry where I deal with seniors, I see what's coming. And not even seniors, but like I've seen people who really don't have any kind of backup plan for when they do turn 65 and stop working. And that's an educational thing. I don't know if it's in the education system, but it's definitely a generation thing. So Generation X. And then what do you think they're doing to their kids? They're teaching them the same habits. So it's just going to keep getting worse and worse. I think the boomers had it okay. The ones who maybe weren't living in a developing country, right? They knew how to save their money because they had to go through tough times through the depression, knowing how to save because they had no choice. But then they taught their kids that now we have all this money. I'm going to teach you never to have to be in poverty again. Have whatever you want. So they almost forgot how to teach them the value of money and the value of saving, right? Because really the boomers had to save for the day. They had nothing. There was no credit. So I think it's a generational thing. I think people who are in high income positions think that the well will never run dry, and as we saw with COVID, that was not the case. Now, COVID is a very special case, but there's another version of COVID that will always happen. And yeah, sorry to make a long story short. Yeah, there is a commonality. I think the Generation X is in really deep trouble, and not to mention they're teaching their kids that money will never run out. And guess what? When you have no money when you're retired, your kids are not going to have any money to help you either, which is scary.
Yeah.
Like it's huge.
Yeah, no, absolutely. But it's interesting because our title is insurance agent, like we are in the insurance industry, but most of our conversation today is literally about money and finances.
Yeah.
And the reality is that is the industry. When people, for all of you out there listening to this podcast, when you are dealing with an insurance agent, you are dealing with your financial well-being, your financial stability. So when you had asked, how do you know if you're dealing with the right advisor? An advisor that can actually help you with that. An advisor that you feel you can trust, an advisor that you feel you can speak to and can actually help you or go into that realm with you. Because if
Yeah.
they can't, that means they're very limited in what they can do. And unless you need that, I'm not saying that captive agencies are not good to work with or anything. That's going to be specific to you, what you want and what you're
Yeah.
looking for and what you need. But don't think of your, like you just said, we're living for the now. Don't think about your immediate need. Think about your need for now and your need for your future, because you expect your life to change. If you're dealing with the proper advisor, expect your life to change for the positive,
Yeah.
as long as you're willing to work with your advisor. Is not there, like they are not magicians. We are not wizards. We can't magically make something happen. The onus, we can give you the guidance, right, but the onus does still fall on the community and that the individual clients to do the work, right,
Yeah.
and make that plan work. So we
Yeah.
can only put it in place, we can only show you how to do it, and we can only give you the guidance. That's all we
Yeah.
can. We're advisors, right? We're not the one doing it for you. So that's really
Right.
important to understand as well, because that's why a lot of clients actually fails, because they are expecting something to magically happen. It doesn't work like that,
Yeah.
right? It's an
Yeah.
ongoing process.
I think between me and you, Phil, we have a lot to say, and I'm so glad that we're starting to do this to be able to give people education about not just what we do, but what's out there and really the myths behind finance in total. I don't think people are talking about money enough. And if they are, it's a very negative conversation where maybe we could get to the point where talking about money can feel positive and hope, uplifting, and not so overwhelming and stressful. And I think this is a great start to what we can provide to people. And I'm sure there'll be a lots more to come.
Absolutely. I'm looking forward to our next podcast.
Yes. So come back. We'll see you on the next video. Bye-bye.